Welcome back. It's time now to take a look at the top business stories. Apicorp raises estimate for regional investments in energy. Air Arabia's net profit gets hit by higher fuel prices. And we find out how to best present yourself at your next job interview. The UAE bourses ended lower again today. The DFM fell 2.4% to close at 1,479 points. Stocks to watch today are Air Arabia, which lost 1.5%. As to why, you will hear in a minute. Mobile phone operator Du lost 3.5%. Developer Arabtech lost nearly 6% today, followed by Aramex with a drop of 7.4%. The Commercial Bank of Dubai lost over 9%. And port operator DP World fell 7.3%. Heavyweight Ema Properties lost 2%. One of the few gainers on the DFM was Dubai Investments with a plus of 1.5%. 136 million shares were traded, valued at 182 million dirhams. And over in the capital, the ADX lost 1.6% to close at 2,579 points. The banks took a beating, with Abu Dhabi Commercial Bank dropping 2.3%. And National Bank of Abu Dhabi falling 4%. First Gulf Bank dropped over 6%. On the other hand, the biggest gainer was National Bank of Fujairah with a plus of nearly 10%. Both real estate stocks, Alder Properties and Suru Real Estate fell, Alder by 3% and Suru by 2.5%. Heavyweight Etisalat lost marginally by 0.5%. 80 million shares were traded, valued at 277 million dirhams. And now it's time to take a look at the GCC markets, which ended in the red today. West Texas Intermediate gained 9% today due to the recent developments in Libya, reaching nearly $94 a barrel. The price of oil is entering a dangerous zone that threatens global economic growth, the International Energy Agency said today. According to Goldman Sachs, Brent crude oil could reach $105 to $110 a barrel in the coming weeks. Let's take a look at currencies and then at oil prices, followed by a selection of metals. And now to our top stories. The Arab Petroleum Investment Corporation raised its estimate for pan-Arab investments in energy. Apicorp sees regional investments between this year and 2015 to rise by $60 billion to a total of $530 billion. The company explains the move with a robust recovery in global oil demand and with oil to stabilize at relatively high prices. In order to meet the high demand, Arab oil producers are set to resume projects they delayed due to the financial downturn, the company said in a statement. Air Arabia struggles with higher fuel prices, causing earnings to fall by a third last year. The Sharjah-based low-cost carrier in 2010 posted a net profit of 310 million dirhams. That's a drop of 32%. Revenues, on the other hand, rose by over 5% to 2.1 billion. Mainly higher fuel prices impacted the airline's profitability. Air Arabia's chairman, Sheikh Abdullah bin Mohammed Al Thani, said the carrier's results were extremely encouraging, adding that he saw significant growth opportunities this year due to the company's ongoing expansion strategy. Abu Dhabi-based NPCC lands a $227 million deal from an Indian company. The National Petroleum Construction Company has been awarded the engineering, procurement and construction contract by India's Oil and Natural Gas Corporation. NPCC will lead a wellhead platforms project at the offshore Mumbai High Field. The overall project completion is scheduled for April next year. NPCC said the contract has been won amid stiff competition wherein 11 international and domestic bidders submitted their bids. And in our fast financial news, Kingdom Holding officially ends its bid for Zain's Saudi Arabian unit. The interest of Kingdom Holding shareholders was the company's top priority, Chairman Prince Al-Walid bin Talal explained. He said the firm's bid was a reasonable offer for the telecoms operator and that they would not increase it. Last week, Zain refused all 3 offers for its Saudi unit. Dubai Islamic Bank will no longer have Standard & Poor's as its rating agency for the bank's debt. The biggest Islamic lender here in the UAE will now work together with smaller rival Fitch. S&P rates DIB at BB- with a negative outlook 1 notch above junk status. Fitch Ratings yesterday assigned the bank an A rating with a stable outlook. Oman plans to raise crude oil production by 4% this year. The country plans to reach an average 900,000 barrels per day from 864,000 barrels last year. New oil discoveries make the increased production possible, the country's oil and gas ministry said. And in international news, the Eurozone's private sector is making a strong comeback after the worst recession since the 1930s. Activity in the region's private sector in February grew faster than expected. Germany, the Eurozone's largest economy, was again at the forefront of this development. Financial information services company Market's manufacturing PMI leapt to 59 points. With that, the index is close to an 11-year high. The services PMI index also rose to a 3-year high. But it's not all good news. The cost of raw materials and energy soared at its fastest pace in Market's 14-year history.
These are great numbers. The headline numbers showing a real strong reacceleration of growth after the slowdown of late last year. Growth is really picking up again. It's also becoming more broad-based across the region.
BP is making one of the biggest foreign direct investments in India to explore deepwater oil and gas. The British Petroleum Company announced a $7.2 billion 50-50 joint venture with energy company Reliance Industries. The deal is part of the oil giant's new strategy of forming alliances with strong national partners. Only last month, BP signed a deal with a Russian company. Analysts say investing in gas isn't without a risk, as gas prices are regulated and aren't rising as quickly as expected. For BP, though, the deal is an important step to profit from the rising global energy demand.
We are predicting that between now and 2030, the world's needs for energy will grow by some 40%. Virtually all of this growth will come from emerging economies such as India. And by 2030, we expect that these emerging economies will consume 2/3 of the world's energy.
Hyundai Motor plans to change the management rules to be more flexible when securing rare metal supplies. The largest South Korean automaker is proposing changes to its management rules to allow it to, quote, rigorously secure rare earth and other rare resources used in electric and hybrid cars. Hyundai is one of many car makers to brace itself against the possible shortage of minerals it needs for its hybrid technology. China, for instance, produces 97% of the world's rare earth metals and last year cut its export quotas by 40%. And after the break, we find out the secrets to a successful job interview.